Okay. I opened on 4 hours. It was open. So let's look at 4 hours to start with. I'll focus on the current state. Then we'll zoom out at a higher time frame and see what it's trying to do. Right. So essentially, this is a support zone. It went above, and then Fed's comment or Janet Yellen's comment brought down. Uh, but yeah, and then it went up actually. So now the problem is the zone is pretty wide. Right? We can shift it like this. Okay, so right. Okay, so this was amazing bounce, and then touched the S3. What a perfect touch if you look at this one. So uh, I realized that so this is a zone, support zone, and S2 was the main earlier support. In fact, uh, yeah, S2 is the main support, and it bounced off the support. Not a perfect bounce, I mean, off the support, but it was not broken, so it's okay. And then tested this one. So I raised this one uh, earlier. Okay, so little bit about this one. So if anyone has risk management, let's say set on S3, that trader need to be very alert when it bounces, which I mentioned earlier, but I'll just quickly repeat that stopping out is not a problem, but re-entry is essential. Uh, so when something like this happens, this is a live case, then trader can actually think about re-entry because this is not something deep enough. And of course, then the support, this becomes a support, or S2 becomes a support likewise. So it went up and now here. So of course, this is like S3, it becomes the support because this is where it has retested, right? If this is broken, then of course S2 will come under play again, but then the situation would be tricky because then the structure would be very fragile. It's already bounced from here and bounced from here. If it breaks this one, then this support may not be able to hold, and, and it could look for lower level. So we'll have to see how high this goes. The pattern that I am tracking is very interesting, where it's kind of an arch, which I would depict like this, where the end point could be deep, like 25K, something like this. Yeah, potentially. Um, so it's going to be very tricky. So in other words, if I may depict, it could trick everybody like this. Zigzag, zigzag, something like this. And this is what, so this must have surprised many. And then this was also a surprising move for many. But when you understand the landscape here, when we say this is our resistance, those who are not judging every other hour or intraday would zoom out and see differently. Right now, I opened the 4 hour to explain the local setup, but to avoid confusion or in and out, one has to zoom out at least at 12 hours one day and see how it looks like, right? But we'll finish off this one and then we'll zoom out anyways. So unless and until now this zone is broken above, it is not going to confirm that it is looking for higher resistance. So to me, it is this kind of a movement is just noise. It is not possible for anyone unless you are sticking to the screen and acting on these key levels. It is not possible otherwise. So I cannot advise what to do, but essentially you got my message that this is like just consolidation here, and it has to break above this level for it to go higher level, technically speaking. Otherwise, it is going to trick everyone. I mean, because this um the consolidation is ugly, but the pattern is simple. Let's zoom out at 12 hours and see how it looks like. So definitely this is stabilizing, but stabilizing doesn't mean that it is confirming anything, because this is still an arch, and this arch has to be broken. In fact, whole entire shape would look like this, something like this. Maybe this makes more sense. To visualize even better, what we can do is we can draw a vertical line like this. So essentially, this is what I'm visualizing. So this part is forming, and it could come down all the way, but it's not going to come down a straight line. And the point of invalidation for this pattern is this. As I mentioned earlier, whether you take head and shoulder or any pattern, cup and whatever handle, or descending triangle, ascending triangle, any shape or pattern you take, there is always invalidation point. Okay, so unless it is invalid, I mean, so you track, you first of all, you will identify or detect a pattern, and then you would expect that pattern to be followed. I mean, price to follow that pattern. However, you would always have invalidation point where pattern would fail, and that invalidation would would be your risk management. So, for an example, in this case, if the pattern is indicating going for 25K to 26K kind of a level, then, and if it was rejected here, and I had called out or set an alert somewhere here indicating that it has hit the resistance, and you know what is resistance mean, uh, and this is a big resistance, and so one could prepare to take action, and there are guidelines that I posted. You must have read about it, right? In a if you have not, have a look into best practices. uh, So if someone has, let's say, shorted here, right, swing and doing the swing. So look at the swing. This is like swing low, this is swing high, and then at resistance somebody has shorted here, and then assuming that with the following, this pattern would be followed. That person is short, and then definitely the person would have risk management somewhere here, because this is point of invalidation. So these are basic rules, or I would say best practices of trading, that combining technical analysis with your trading rules basically. And trading rules would be individual, where technical analysis would be universal. So each one would have different trading rules using the information that you get, right, from patterns like this or key levels. So it's like a teamwork. Yeah, right. So this is the pattern I'm following, right? Now I think at least you got a good understanding. So we'll zoom out. So the path means up and down, could be anything. Essentially, direction and key levels are important. that this is the direction and these are the key levels where it would react, and it is reacting. So it may get rejected somewhere here if this pattern has to be complete. If it goes up and goes here and tries to break out, then this pattern is gone. Then means we'll have to think that then totally different pattern. In that case, if we take that scenario, then I would say then this consolidation would be treated. So let's say the whole entire zigzag pattern in that case, a bullish scenario from here would be like this, that okay, it came down, right, and touch this one, it may not go right away and then shoots up like this. This is a bullish scenario or continuation pattern, you may say, in that case. So kind of a flag pattern which continues on the on same direction as trend. So this is your trend. Remember, trends are subjective. If you zoom out, the trend is descending. And if you zoom in, then trend is ascending. So it depends on what wave you're focusing. It's very, very um, subjective. Right? It's like wealth. If you compare with person X, you might be wealthier, but if you compare with person Y who has more wealth, that you're not as wealthy as that person Y. So similarly, it's very subjective and always relative to something. So now we'll zoom out and one day, and probably I'll just hide drawings for clarity on one day. This is also very important. And as I mentioned, sometimes you have to change it to line chart to see what is really happening, because it reduces noise from the, because it always depicts, line chart depicts closing values. So if this is one day, so end of day price, it takes and plots this line chart. So it doesn't involve opening high low points. It always depicts the closing. So candle has 4 data points: low, high, open, close, right? But this line would only have closing points by default. I mean, you can change it to low or whatever, but by default, it's always close. And what we are seeing here is this is the recent bottom where the journey started. And so this was the first leg up. This was a deeper one, but not deep enough. So this was the first leg up. Then this was a counter trend. This is a counter trend, a correction much deeper than this one. However, not deep enough to thread this up moving or this particular segment of the uptrend. So this is the first segment, and then a counter trend, and this is the second segment. So now there's no rule that it has to correct. It has to follow certain support. This, especially this one, the recent low that we have seen, is very essential, because if this is broken, then this structure or consolidation will be weakened and it will look for lower support. And that's where we are saying that it could touch 25, 26K level if this consolidation is taken out, right? However, right now it is above the recent low, which is this one we saw. And if it consolidate and then spend some time, come next week, it breaks above, it could go for the next higher level. So we don't have to be bearish, we don't have to be bullish from mindset point of view. See, sometimes people get confused that you cannot be neutral. Answer is yes, but from a trade point of view, one may argue that if I'm neutral, how can I take side? So that's the thing. Of course, when you have to trade, you have to take long side or short side or sideline, whatever. Out of three possibilities, you have to. So you have to be decisive. When I say you have to be neutral, it has a different meaning. You have to be decisive but you have to be neutral together. What does it mean? It simply means that, let's say you have taken short on resistance. As I mentioned earlier, there is point of invalidation. That means if it breaks above the resistance, then one has to accept the fact, not to stick around with prior decision. So if the prior decision or the current decision basically is to short, which is okay, let's say, but one has to be open enough to say what is my exit, what is my flipping condition, right? So when I'll go long or maybe I'll sideline, it depends on the individual. But the point is when to reverse my decision has to be rule driven. So this is about being neutral. That means one is not biased. If you have taken decision at this point in time based on your information, based on all the input that you get from everyone that you refer, and you come up with a short decision, you stick to it with a rule saying what is my exit condition when I'm going to close my shot. Everyone must have that level in mind, and you cannot just keep changing it. Sometimes you may tweak it, but the point is it should be written in your book or somewhere that this is my exit condition, and maybe you can have a note why, and so for your own journal and diary for you to refer and learn later on. So these are very essential, for any trader. You must know what is makes it. So if you're long, the same thing. So it dip right now and then it bounce off the support. And if you're long, but you know that what support should be used for your stop loss based on the risk that you're taking, right? Or based on risk that what is my tolerance level and I must get out and so on. So whether you go short or long, whatever decision you make, if you have exit condition, that is what I meant. You are agnostic of any direction. You're not biased towards any direction. What you do essentially is you accept what market is offering. And this is where majority of the people fail, that they stick to their expectation and desire, and they're not embracing what market is offering, or they're not accepting the fact what is really happening. The reality is these things are so dynamic that it's not set in stone that okay, because 15K it went to 27K, it cannot break 15K. But of course, and similarly, uh, it is not necessarily it will come back to 15K or lower. It could continue and then this could be the end. But you cannot prove it or you cannot confirm it. What you have to do is each stage you have to consider that what is my next level and so on. So each major step, where resistance or support, you have to just take side with point of invalidation, and then you have to repeat this process at each and every milestone or key level. So in this part of the process, you are not required to be bull or bear at all. What you're doing is you're taking decision whether to go long or short or sideline on a major junction. And if you look at very carefully, it's not, especially on Bitcoin. I cannot talk about the small cap, low volume pump and dump point, but Bitcoin like this, where it gives you enough time. If you look at this chart, there was enough time, more than enough time, in fact, frustrating time here at 15K, 16K. This was enough time. This was enough time. This was tricky, but we I had called out the support, so you had that input. Now here, see, for last 4 5 days, this is a narrow range where it is moving. You have enough time. There is no need to hurry. Absolutely, whatever side you're taking, right? Because it's a major resistance from a major trend point of view. Then short makes sense. If you're thinking from a short term, then this is a support, right? Then it can be long with a, and in whatever you do, you know what is my boundary. and then that boundary becomes your point of invalidation. So it's so simple, but it's not simple for those who are trying to do in and out every few hours, because you need then tools. You need something like Prism, you need something like M2, or you need something that other are providing. I'm not saying what I'm providing, but any other tool which are good ones. Okay, that's the thing. And fast moving also requires you need tools. I don't think any signal channel can guide you every hour, every few hours, telling you what to do. They will just give you key levels, and then if you're stopped out, they're not going to say, "Hey, you re-enter." No, that's not possible for anyone, because there's so many coins, and it happens so much. I mean, so fast, one cannot. But in our setup, I decided that whatever coin I choose in Trident, I I'll track it. So you have that spreadsheet that I post with a support. And I would discontinue only when its next resistance is hit. So that's something I'm doing as part of the improvement. And of course, in this format, we have two format where we have fixed active list. We track every week. So it is for those who are looking for longer term, not not for not resistance by resistance view, but trend level view. So this weekly call is for those, and Trident is only for one-off calls, as you know. But in Trident, I kind of improve in a way that I'm not just throwing coins. I have thrown actually many coins, because there was some short-term opportunity that way. I mean, setup wise, they were good, but in this condition, Trident is useless because what BTC is doing, unfortunately. So anyway, so I think coming back to my earlier point, this is giving enough time. So now we are on upper, swing trading setup in this weekly call, right? So I'm talking from that perspective that you had major consolidation here, and now it is consolidation here at this look at this setup point of view. Right. Okay, so there's enough time for anyone to plan accordingly. So in this case, one has to be very patient about it. Very patient. Cannot get frustrated in 4 5 days of consolidation. Many people lose money in doing quick in and out. You could do only if you have skill and if you have time to do so. Then only. If you don't have time and skill, I think swing trading is more appropriate in that case. So that's why we have two flavors. Um. Anyway, so yeah, let's go back to higher time frame on a weekly and understand the setup here. This is again a line chart. So what is good is this breakout, the weekly breakout was amazing. It broke about this setup. So this is the drawing from the last week. I haven't changed anything. And let's change it to candle for now. And this was amazing bounce of the support, and then awesome looking breakout from last week. Now this was the orange line. On a weekly level, it's approximate line, as you know. And so this is where it's consolidating at this moment, right? So if it continues, then it will continue. Otherwise, so you see the arrow, it could come down and go down. So in this case, if this arrow depicts a deeper level, probably I should not go and show that deep, but it could be like this much, where it could retest the breakout boundary. Let me zoom in. So this is a breakout, and this is breakout boundary, right? So it is possible that it could retest this breakout boundary and then go for higher level from a scenario point of view. And of course, If it goes deeper, then it's a point of concern, because the whole entire consolidation happened like very long, since June 2022. So it's almost a year, at least 3 quarters. And ultimately, after 3 quarters, after 9 months, we got this nice looking breakout. So coming down up to breakout boundary is totally fine. What we don't want is entering into consolidation phase, which is kind of achieved on a weekly time frame. Okay, now we are not talking about price. Remember, when you talk about weekly, it's more about trend. It's more about zones, not price level, dollar number. So if you ask me what you don't want to see, because everybody would like to see coin go up, because that's where the maximum bias, or majority of the people with bias, and it makes sense, especially for those who cannot short. It makes sense as well. Those who could short, I don't think they need bias, because they buy long and short is one and the same thing, more or less. So those who have access to both the direction are blessed. Those who are in the US are not so, I know, not having any advantage, unfortunately. Anyway, so for those, it makes sense that it goes up. But from TA point of view, I don't care whether it goes up. Even if it goes to 1,000, I don't care, to be honest. I mean, industry wise, it's not good, because many people would lose and all that. But point is, lower or higher doesn't matter for TA, because it's all about point to point traveling. It doesn't matter whether it's south or north. Anyways, so, but those who cannot travel to south, it makes sense that it goes up. So for them, I would say, yeah, it would be good for if it doesn't re-enter. So that's the only condition I have on a weekly time frame point of view, that it must not enter in this block. That would be bad. So that's only one thing, a big thing. Okay, so the boundary is approximately 25K. What else we should talk about? I saw one thing that you would like it, a simple trend line. Simple trend line. If I draw this trend line and touches this one, what you would see that the breakout happens, and then this one was the retest. It was a perfect hit, actually, first hit and a second hit. So this was very scary for many people. And when I was watching, it wasn't scary for two reasons, because the depth was not so deep enough. And I had this support mentioned earlier. And then trend line support was also there. Many other things which I would not share, but you got it. At least to simple trend line, I can show you that this was the first touch and this was the second touch, and then it shot up. So this is a big achievement that way. Now, trend lines are tricky, but at least we can retrospectively confirm that this is what happened. Right. I would like to zoom out even more. And so we have this bullish case where this kind of pattern formation I foresee. The timeline could be little different, depends on the strength. So don't try to say, but this is more or less high level path where next year, somewhere next year, it could go all time higher. I don't agree with someone like Balaji, but it's a different topic. I would stick to my TA. Okay, and of course, this is not high enough at this moment from a big picture point of view. In my point of view, it has to break about 32K at least for it to go for new all-time high. And I'll update you because things are dynamic. So, TA point of view, the recent high is not good enough. It has to be higher because this is a major down move. Forget about this bounces in between. Again, then you have to have this line chart in front of you, and I'll hide the drawing as well. So you have to smooth, you have to think that this is one big downside move, and this is the big counter trend. As part of this big downside move, there were two attempts. That's how you can see. So this is like first leg down, an attempt failed, second leg down, attempt failed, and then third. And of course, you can always break down each of this wave into multiple, let's say there is something here, and so on. But you should not go too much. But if you zoom out, you see this is the my point of rejection. And then this whole entire move is one wave from a big picture point of view, right? So if I may include this one, I would say this is the first big move, and then this is second counter. This is a counter move, and then this is a second big move, right? Consolidation, and then this is first leg major move leg down. So if you zoom out, as I said, the wave structure is very subjective to what spoke you're considering. In that case, one can say this is one entire big move, and then this is the first counter trend for that big move. So you see how it depends on how you segment this wave. And then if you say this is my starting point, this is my end point of the first big move, and this is my segment or sub waves 1 and 2. And then this is my counter trend, first counter trend of this one, which began at 3K. So 3K to 60K, 65K, and then 65K to 15K, right? So this is also a way you can look at it. And if this continues, then you may say, then it would create one more leg on the upside, right? If I consider this as a starting point. And of course, there is no end to it. If you zoom out, then you talk about the cycles, right? Like this, where this is one, then counter trend, second counter trend, then third. Of course, there was one more, which is not on the Bitstamp, but on some other chart that I use. So there are 4 cycles. So the one which is not on the this Bitstamp chart, then this is the second, then this is third, and this is the fourth. From a big cycle point of view, right? And then this is the bear trend of the cycle 4, right? So if this ended very well here, and if this continues from here and it gets rejected, then you can say the bear trend continues and create another leg down. But in that case, I have very different understanding or interpretation that if it has to happen, then what we can say that this counter trend for cycle 4 is actually over here, right? But if it has to go down, then this correction will not be considered as the correction of this particular cycle 4. Then this correction would be actually for whole entire wave right from the beginning, right from the inception, which is not mentioned here. Because then, simple reason, let me open the BNX chart, which has more history. BNX chart, which has more history if you look at it, right? Right from 2010, which is good enough. So first one, and second one, third and fourth, which I explained. So we would not like it to break 15K. Otherwise, the further correction would not be for this particular wave, but for whole entire wave as a whole. That means then you have to consider this as the lowest point, this as the highest point, and consider this as one wave, and then this is the first segment of the wave, down wave. and then a little bounce because it's a tiny first bounce and then goes down and so on. Then it could go down 10K, 6K kind of a level, or what could be worse in that case. When? If it breaks 15K. So from a very mega big picture point of view, mega cycles point of view. So earlier, as I mentioned, when I was talking about weekly, 25K is essential. I'm just touching the mega trend here. People don't want to talk about it because it's so scary. And I don't care about what is it's about education. And I always mention it. So I won't spend much time because it's not happening. There's no need to. First 25K has to be broken, then 15K has to be broken, and then we can talk about more level. So I'm not talking about lower level. I want to just educate about the cycles and the waves. That's it. That's my goal here, to educate about the wave structure and the subjectivity of the wave structure, how you see the chart, education point of view. And one cannot forget that this is bending and slowing down. So these are essential properties of this price action that you must know in my so technically speaking. Another way of looking at it, that um, if you draw a trend line, this is actually broken over here. And this may touch this one, 32K, from a trend line point of view, which is a very normal reaction. So that's why it is also important that it breaks above 32K. Right? I'm trying to show you from a different point of view that uh, this trend line is broken when below, and now it's trying to go up. And you may say this, if I may adjust a bit, this had stopped where it had a resistance from a big picture point of view. And this particular line is another line we could draw at around 10, 11K, which is this one. So see, these are the structures. So, so when you say this is going down, fine, it's supported where actually there was a prior cycles resistance from a mega structure point of view, which makes sense, and it offered a bounce. But then from this, if you look at this trend line point of view, this trend line is not broken above, because that's what happens. This is broken. So usually you would draw like this and broken, right? And you see the first rejection over here. I hope you're able to see it. Maybe I should zoom in. The first rejection was here. But then if you extend it like this, right? Then you get another point somewhere here that it must be able to break above for it to continue. You won't deny the fact. Right? So all this bounce is welcome, encouraging. But I tried to depict both sides of the picture, so you don't get extremely biased toward one side of the. So I'm not bearish. You can clearly see, and I'm neither bearish or bullish. What I'm trying to share here and highlight here are the way is different wave structure and key points or key levels. So we are mentally prepared, and we can take each key point as a checkpoint and see and validate. Okay, now it has reached this checkpoint. Now what? And then so it's each when you make a long journey, you can say from city A to city D you want to travel. Each city in between or each major milestone is a checkpoint to confirm or validate that your journey from point A to point D is valid. So point B, C in between, let's say in this example, are point of validation to confirm that your journey is in the right direction. Similarly, each level are confirming that it's going up. So it went up, broke about the local weekly level that we talked about, 25K, is a confirmation that the attempt is not dying. And then if it continues with on on the upside, then we'll say, okay, it wants to go towards 32K, 33K, but then I would stop there and say, okay, now then when it reaches 32K, 33K, then again we'll have to analyze and say, okay, now what, and so on. So I hope you understand the methodology here. And in this kind of process, you're never in surprise because you are not firmly committed to any side. You are kind of you are, of course, you are taking side, but you know what is the next checkpoint and what is the point of invalidation. Okay, so I hope this is clear. Go back to okay. Right. So let's zoom out again. Yeah. And of course, if it continues on the upside, right, then it would start another mega trend. In my point of view, if that happens, then it will be end of this four cycle, so to speak. The fifth cycle, it will start with the fifth cycle. And the fifth cycle is actually, from a mega cycle point of view, second cycle. Because it has to go at a higher speed if in that case. But if not, then it would come up with this kind of a long cycle. Then it would be the fifth cycle. One, two, three, fourth, and the fifth one would have very, very low slope, like this, like this. This would be the fifth cycle. So like that. And it makes sense when an asset matures, it slows down. It doesn't remain like the river. River is silent near the shore, seashore, when it merges with the ocean. You know that, right? And when it starts its journey, it's violent. Um, Many waterfalls in between, and the stream is so violent. The force is immense. That's how it is with our life as well. As a kid, kid is vibrant. Then comes 30s and 40s. You know what happens, and then we haven't seen 70s and all, but that's what happens. And then this same thing with any asset I have seen, and then the clock resets somehow, right? So in my point of view, if it goes vertical with a very violent move, uh, and instead of going this way, if it goes near vertical from this point on, then I would say then it's a new mega cycle. Then I would consider this as a first wave, and then that becomes the second mega wave. So then this first mega wave ends here, and then beginning of second mega wave. If it goes vertical, if it goes in at this angle, which is lower slope than this one, then I would say that would be the fifth cycle of this first mega wave, first, second, third, fourth, and then fifth. So this is what I just I'm just sharing with you what I'm thinking. I hope you find this useful. I didn't plan all this. This is what happens on weekly call. I end up in something which I would never plan, and end up speaking on something. I hope you find this useful. Let's come back to our weekly. Oh yeah. So on this one, I have scenarios. So if this is invalidated, then I see a huge head and shoulder which people are not talking about, but I must talk about it. Okay. And of course, if it breaks about this, then we have beautiful breakout, and then towards end of this year, from this structure point of view, the price would be near all-time high. Okay. I don't think it will just go like what Balaji is saying or anyone like Balaji is saying. So I'm not in those kind of um um I would say opinion. Yeah, I'm not with that kind of opinion. So for me, it will follow either this kind of a setup to start with or follow this kind of a setup. So we'll see. And anything changes, I'm going to modify it, right? If it changes, but for now, this is how it looks like. And monthly is awesome at this moment, but let's see how next month starts. Like this quarter is also ending. If you look at the, we should look at the quarter also because March and so it's we should look at not many people look at the quarterly chart, and I think we should look at the quarter and always forget VLX. VLX. Should add this VLX. This has more history. So this is quarterly, and quarterly looks amazing, isn't it? Amazing. Yeah. Right now, no sign of weakness currently. Looks awesome. Hmm. This is important. From a candle point of view, candle connects low. Remember, candles connects low. That's why it gives you this level. See now, but that's why important, right? If you just consider close, then the angle of this one is different, which is little higher. That's why there's difference. I'm connecting to this low. That's why it is giving me this. And it landed here as well. It's not a coincidence. It landed here. Failed attempt, down, second attempt. So this is the first attempt, which I mentioned earlier. This second attempt. And it is here. So from many point of view, what you would not like to be strongly on the upside. Not yet. It's not, we don't have a technical stamp. I, yes, this is recovery phase, which I always say, this is recovery phase, understand. So as part of the downtrend, as long as we understand, we are good. But we are not so far from a new or trend reversal. We are not so far. And you will get that update for sure. So I think this is good enough on Bitcoin. And we have seen, we started with 4 hours, we saw 12 hours, 1 day, 1 week, 1 month, and quarterly. I don't think anyone should have any ambiguity understanding. And but we'll do Q&A. So in case if you have any question, and the Q&A is only for those who attend live. The recording is never available for them, right? So that's the thing. That's something for me to. Otherwise, it's so boring to record this video without anyone on the call. So I'll end here the Bitcoin part.